Okay, in this video, what we're going to do is talk about how to use the accounting equation to help you analyze transactions and record them in the journal entries format in the books of the company. So as a refresher from the previous videos, our accounting equation is assets equals liabilities plus owner's equity. We broke that owner's equity down into capital, stock, and retained earnings. And then if you recall, we said that the components of retained earnings are revenues and expenses, which make up net income, as well as dividends. The arrows on these T accounts represent the effect of a debit or credit on these various types of accounts. So the increase arrow, the arrow going up on the asset, the left side of the asset T account, means that a debit would increase that asset account. So let's see how we can use this to analyze transactions and record them properly. Here's an example of a transaction. Lila paid cash to purchase a piece of equipment from the local hardware store for use in her lawn mowing business. We got to record this transaction in Lila's accounting records. So the first thing we need to do is analyze this transaction and determine what accounts are affected in this transaction. So in this one, it's going to be cash and equipment. When she pays cash, cash should go down, and when she purchases equipment, equipment will go up. So next we got to determine what type of account these are. So cash, if you recall, is an asset. Asset is decreasing. She's paying cash out for this equipment. So how do we decrease an asset? If you look to the right side there under the accounting equation, we decrease an asset through a credit. So we need to credit the cash account. Equipment is also an asset. Equipment is increasing because she's purchasing equipment. We increase an equipment or an asset account through a debit, so we need to debit the equipment account. So the journal entry for this transaction is a debit to equipment and a credit to cash, an increase in equipment, a decrease in cash. So notice on the right side, we have an increase in one asset and a decrease in another asset. So the accounting equation still balances out. The net effect on assets is no change. So our equation still works. But what if she had purchased this equipment on account, meaning she would pay for it later? In that case, accounts payable is affected instead of cash, and of course equipment is still affected because she's purchasing equipment. Accounts payable is a liability account, and this liability account is increasing because she's going to owe more money. Okay, how do we increase a liability account? Through a credit. If you look over to the right side, credits increase liability, so we need to credit the accounts payable account. Remember that equipment is an asset, and that asset account is increasing because she's purchasing more equipment. We increase the equipment account or the asset account through a debit, so we need to debit the equipment account. So our journal entry will be a debit to equipment and a credit to accounts payable, an increase in equipment and an increase in the accounts payable account. So over on the right side, this time we have an increase in assets and an increase in liabilities. So again, our accounting equation still balances. Well, let's look at a transaction that affects the equity section of this accounting equation. So the transaction here, Lila received cash in exchange for lawn mowing services provided to a customer. Well, she's receiving cash. Remember that cash is an asset account. It's going up, it's increasing because she's receiving cash, and so we need to increase that asset account through a debit. Well, when she received the cash, it was because she did some work. She earned some money through mowing lawns. That's what we call revenue. Revenue account is under the revenue T account over there on the right side, which is under owner's equity. We increase this revenue account through a credit. She's earned more money, so that needs to increase. So we need to credit the revenue account. So the journal entry is a debit to cash and a credit to revenue. But if you look over on the right side, we have an increase in an asset and an increase in owner's equity through the revenue account. So again, our accounting equation balances. So hopefully these few examples help you to get an idea of how you can use this accounting equation to analyze transactions and record them properly in the books of the company that you're trying to record for.